Hey, welcome to Grandpa Sees the Blinking. Please don't take anything Grandpa says as financial advice. And if you would, please like, share, and subscribe. So, we are going to talk about the advantages and disadvantages of a limited margin account. And what is a limited margin account exactly? And if you want, my previous live stream was on the advantages and disadvantages of a cash account. And because there's advantages and disadvantages of having different types of accounts. Okay, so and I'm going to go through 3 days with you of potential trading that you could have done with a limited margin account and what would have occurred very likely had you done so. Okay, so a limited margin account is a margin account with limitations. And a margin account allows you leverage. They allow you to spend more on trades than you have money for. Whereas with a cash account, you can only buy the shares that you have actual money for. But with a margin account, say you have $2,500 in your account, for instance, a margin account will probably allow you to buy with $2,500 you could only buy 10 shares. But with a margin account you could probably buy 20 shares, just approximately. Okay? So it allows you to buy more with money that you don't actually have to buy shares. Okay? So that you have a potential to make more and or lose more. Okay? That's how it works. And so say you have a margin account and let's just talk about that you have the ability in your margin account to buy 25 shares with your margin and everything. All right. So what does that mean for you? Well, you first off, you have rules and regulations, and they're very, very important in a limited margin account to the extreme. Because if you break the rules, you're going to potentially be stopped from trading except for closing trades, and they won't even allow you to have a margin account anymore. Um, and if you break the rules 3 times, you'll find out that's what will happen to you. All right, and the rules are this: with the limited margin account, you're allowed to make 3 day trades per. I want to say per week, but it's more complicated than that. Uh, so I'll just start with one example. All right. So say on Monday morning you want to make a trade with your limited margin account, and you buy 10 shares going long, okay, and you exit that trade the same day, okay. That is 1 day trade. Now, keep in mind, you're only allowed 3. That one that you did on Monday will not be ready again until the following Monday. Every 5 trading days. If there's no trading on Monday, for some reason, a holiday, whatnot, you wouldn't be able to trade it until Tuesday, obviously. So, and it wouldn't be available until then, okay? And so there you used up one, okay? On Tuesday, you do the same thing. You this time you go short and you short the market, which you can do with a margin account. That's one of the advantages of a margin account. You can short the market. So you just go short right out of the chute, and you make money doing that, and you sell after half hour, whatever, and you get out and you have your profit, and there's your day trade. And then on Wednesday, you buy long and you make your little profit. Well, now you've got that's your third one. You you cannot trade Thursday with a limited margin account. You can't. You can't. You can burn up all three of your day trades in the first day. You can go in and out, in and out, in and out, all on Monday. And you will not be able to trade again until the following Monday. Okay? In the first scenario I gave you, you did one on Monday, one on Tuesday, one on Wednesday, and you cannot trade again until Monday, and on Monday you can only do it once. On Tuesday, you'll get another one back. On Wednesday, you'll get another one back. And that's how it works. And if you break the rules and do it more than you're allowed to do it, trade in and out, even if you're making money, doesn't matter. I don't think they want you to make money. That's okay. The rules are not designed for you to make money. They're designed to complicate it so you have more to think about than what you should be thinking about, which is how to make money. But anyway, so that's one of the hugest disadvantages is you're so restricted to what you can do. And so what happens is people, if you say you buy shares on Monday morning and you keep them until the next day, it doesn't use up your day trade. As long as you buy them and sell them the next day, you don't use one of your trades. So then on Tuesday you still have all three of your trades. But the risk is that you keep them overnight. Keeping them overnight is a very scary proposition, especially in a stock like Tesla that can gap up or down overnight $10 in the other direction. Sometimes it might work for you. You might make $10. But when it goes down the other way, $10, you'll wish you hadn't done it. And not only that, you're in a margin account. So when it goes against you, you either got to add money to your account to cover your margin, and or you have to sell your shares and take the loss. And it wipes people out. It can wipe your whole account out. And so the idea is you have to have a lot of patience to do a limited margin account. Is it fun? Can it be wonderful? Yes, it can be wonderful. Can you make money? Absolutely. But you're almost, the only advantage you really have is that you can short versus a cash account. A cash account you can only go long. You can only buy upward and then sell out. And there the money comes back to you right away the next day. It don't work that way with a limited margin account. Limited margin account, you can burn all three of your day trades right off the bat. And after this one, I'm going to talk about a full margin account, which is what everybody strives for getting. But I'm going to talk about the disadvantages of having a full margin account also. there's huge advantages, but there's also some major disadvantages that get people in big trouble with their full margin account, even if you have enough money to have over 25,000 in your account and have a full margin account. But getting back to our limited margin account, so knowing whether or not you have a day trade left, and you can't necessarily count on your device to count it properly for you. I would not rely on it, because I've seen too many times where the device is off on the number, how many trades you have left. So you need, if you take a trade on Monday, have a notepad, write it down. Traded Monday, in and out. You know you're not getting that one back until the following Monday. If you trade twice in that day, traded twice, you got to wait till the following Monday to get your two trades. You'll get them both back, but you won't get them back until the following Monday, and so on. And so know the rules on day trading, because they will literally, if you mess this up, they'll close your account to selling your shares, and they will not. You'll have to go to a cash account, because they won't let you have a margin account. If you can't function a margin account day trading and go by the rules, they'll take it away from you, and they won't give it back to you. There are instances where after 90 days they might give you one more chance to try it, but if you flub it up after that, and that's at their discretion if they want to have mercy on you and let you do it again. But if you flub it up after that, you're not. The only way you'll have a margin account then is if you do a full margin account and put 25,000 in. They're not going to let you play with a limited margin account no more. Ain't going to happen. That's reality. They have rules, they have regulations, and they don't care how sad you are. Okay, that's just reality. Okay, so let's go through some scenarios here. What day do Grandpa got on here? I'm on 10:16, I believe. I think this is where we're starting. Okay, so we're looking here for a buying opportunity, a buy signal. Grandpa each day does reverse engulfing method in the 5-minute chart, and I give buy and sell signals. Okay, now with the margin account, you can go short, which is down. You can go over here on your price ladder and hit sell, and it'll give you so many shares going down that you want. Or over here you can go long on the price ladder. Or you can sell up here in sell market or buy market, okay? If you sell right out of the gate with a limited margin account, it will give you shares, and then you want the price to go down. And if you buy, you want the price to go up. Well, in this case scenario, we're pre-market, okay, and there again, the regular market opens at 9:30. Then you can have day trade enabled on your device. But if you're going to enter a trade prior to 9:30, and in this case you're going to want to, you need to have GTC EXT enabled on your phone or on your device, your computer, and on your computer you need to have TIF enabled, okay? And so learn how to do that if you don't know how to do it, because you need to be able to enter trades pre-market or aftermarket, and you need to know how to do it. You need to know your device, of course. Okay, so let's pretend you know how to run your device and you know how to push the buy button and the sell button. And that's we've all made mistakes in that area more than you realize. People will get excited. They think they're buying and they push the sell button, and vice versa. And extremely intelligent people that do that. They just get excited and they just can't think straight for some reason. But anyway, it happens, and it's happened to Grandpa. When you enter a trade, always, and I'm telling you always, check to see that your order actually filled. Did you get all your shares? Did you get partially filled? Did you go in the right direction? Did you actually buy long or short the way you wanted to? Because there's a good chance you probably didn't do it right. Oh, Grandpa, I know what I'm doing. Yeah, right. I know you do. Always check. Always check. Immediately when you place an order, check to see if you got it right. Go to your orders and look at it. Go up on a computer, you go up to monitor, you click on monitor, it'll show it to you. On your phone, you go to orders. Look at your working orders and your filled orders. Okay? All right, so we're going to do a buy going up here with this limited margin account. Okay? Well, this guy, he's got enough money where with his limited margin account, he can get 25 shares. Okay, so we're gonna talk about that. He's got a whopping 3,000 in his account, and he's got a limited. You could have a limited margin account with as little as $2,000 in it. Okay, and you can have a limited margin account. Okay, so say he's got 3,000 in there. He's got he wants to buy 25 shares, and he's waiting for Grandpa to give the buy signal on Monday morning. We'll say. So here we have the big red candle. This candle here is engulfed into that one, and it doesn't matter that this one isn't. But here, when we get the first green candle, Grandpa will be screaming, we have a buy signal in the 5-minute. That's what Grandpa will say. We have a buy signal in the 5-minute chart. Okay, and so you know you want to buy. Well, you want to buy relatively quickly. You don't dilly-dally around. You got 5 minutes from the top of this candle to the bottom of it. You're going to end up buying right about in the middle. And it's going to be right at $220.60. All right? And what happens? Well, we're going to go until we get a sell signal. All right? We don't get a sell signal here. We get a red candle and it's a bear flag. We don't get a sell signal there. We get a sell signal here at $221.60, up $1. Grandpa's going to say sell. Sell. Get out immediately. Take your dollar. You made 25 bucks, and it took you about 40 minutes, 35, 40 minutes. You can do multiplication if you want to do more shares or less shares. That's irrelevant. So you made $1, but you had the potential at one point to have over $2. You could have easily taken $2 in the first 5 minutes of the open. you were up $2.20 something. So you could have easily sold at some point for $2. And uh, Grandpa likes to talk about pigs get fat, hogs get slaughtered. You get if you're up $50, take your money. That's Grandpa's thought on the subject. Grandma, she loves taking her $50 and waiting for the next day, because the next day you have another opportunity. And besides, here you burned one of your trades. Keep that in mind. So now you only have 2 trades left. So you wait for the next day. You wait for the next day. Oh boy, the next day is looking good for you. Because why? You have a limited margin account. You have the ability to go and short the market. You have the ability to short the market. So we're looking. We're gonna see. Are we gonna get a sell signal here? And there again, it comes pre-market, before the open. The gray is pre-market. So you need to have your good till cancel extended enabled and on so that you can go short. Okay. And right here, Grandpa starts singing, oh boy, sell. We have a sell signal in the 5-minute. We have a sell in the 5-minute, and it hits right at 221.85. You're going to get into that trade at that number. You'd have to be completely out of it not to be able to short it at that price. All right, and what happens? Well, it goes down, and then look at this. 1, 2, 3, 4, 5 green candles go against you. But Grandpa's still saying, what's he saying? We have a sell signal with a bull flag. That does not mean you get out of your trade, because you're in the red right now. You're losing money. This thing has gone against you, but it's not a buy signal. Grandpa hasn't said, hey, we have a buy signal. Grandpa's still saying we are still under a sell signal in the 5-minute with a bull flag. A bull flag is where it bounces. It's like the waves in the sea. It bounces against you. But look what happens here. The price goes down. Because why? Because you're in a legitimate sell signal. That's why. And does it go down much? No. But it does give you $1.85 from the time that we get our buy signal. So from the time that we get our actual buy signal, which is right here, you will have made $1.85 per share, just under $2. So you made about $45 on your 25 shares. However, you had the potential, if you sold down here, to easily make $3.60 per share. So easily $3. So you could have made $75 on your trade in about 5-10 minutes. Okay, from the time you got the signal, in about 10 minutes, you would have had your $3 profit or $3.50 profit, okay? And now you've used 2 of your trades, Monday, Tuesday, we're saying, all right? Now, so there you got a chance. Now, with a cash account, you're not trading this, because you can only make money going up, okay? You can't make money going down. But a limited margin account, you can trade either direction. Okay, so in this scenario here, we're looking for a buy signal, and we get one at approximately 219.65. Where is that at? Grandpa's trying to find his buy signal here. So I'll tell you, sometimes these candles are a tough game to figure out. Okay, I see it here. All right, so this candle here, this red one here, engulfs into that one, followed by the green. Here's your buy signal. Okay, here's your buy signal, and it maintains itself all the way into the open through this mess. But it is a buy. So Grandpa's going to be telling you that you are in a buy signal. Okay? And so if you buy at 219.65, the price is going to go up. You're going to be happy. But then the price is going to fall back. And keep in mind, each candle is 5 minutes. 1, 2, 3, 4, 5. 5 red candles. But it's a bear flag. It's not a sell signal. You're still in a buy. You're still in a buy. Here you get 3 more red candles. 1, 2, 3. Oh, Grandpa, it doesn't look good. You're basically running sideways. It looks worse than it is. But you're still under a buy, okay? And you're going to make some money. It's just a question of how much. That's what it is. And remind me to tell you about trading in a tight market, because we're in one right now. And we're trading against the dominant trend if you're going long. But anyway, regardless, here you are. You're in at 219.65. And if you sell at your first opportunity, when we have our sell signal, comes at 220.65 right here. This is your sell signal right here. So if you wait until Grandpa tells you to sell, you're always going to give up some of your profit by the time you get the signal. Sometimes you end up giving all of it up. But in this case right here, you made $1. You made $1. But keep in mind that for the last, 7 days have been straight sideways in a $3, $4 range, $5 range, very tight, where traditionally Tesla would trade between $5 and $10 between high and low per day. And that's part of the reason Grandpa enjoys trading it, because you need movement to make money. But as of late, it's been very tight. So I'm showing you absolute worst case scenarios is what you're looking at right here. The range on this particular day was about $3 from high to low. Pretty hard to make money in a range that's $3 from high to low. All right, so getting back to your trades. So here you made $1 if you waited for Grandpa. Okay, so you made your $25, right? Or if you had 10 times that amount, you made $250 and so on. However, you had the potential to make $2. You were up over $2 at one point here, right away, very quickly, within 5 minutes. You had the chance to make $2 and make your $50. By waiting, you ended up with, but there's always a chance it could keep going up also. So you got to make those hard decisions. Do you wait for Grandpa's signal? And like I say, in this case, you would have made $1. In some cases, if you wait, you're going to break even. You won't even make anything, and you used your trade up. Okay, so Grandma, if she's up $2, she's out of Dodge. She takes her $50. She loves making $50. You know. Now here, so you went Monday, Tuesday, Wednesday. You used up your 3 trades. You cannot trade on Thursday. You cannot trade on Friday. If you do, you won't be. They'll take your margin account away. They might give you 1 warning. They might give you 2 warnings. But if you do it 3 times, they will take your account away from you, and you'll be limited to closing transactions, and you'll have to change it to a cash account. And if you can manage to mess up your cash account, they'll take that away from you. So, you need to understand and know the rules, okay? Do I like the rules? No, Grandpa don't like the rules at all. I think they're designed to help you lose your money. They try to say it's to protect you. And maybe to some degree it is. But so that's a limited margin account. And really the only advantage over a cash account is you have the ability to take a run down when the market is going down like it currently is. With a limited margin account, I wouldn't even take a long trade ever. I'd wait for only sell signals, because let the trend be your friend. If the trend is down, it's down. When it's up, it's up. When the trend is up, it's up. And Grandpa talks about that stuff all day, every day, whether the trend is down or the trend is up. So if I have a limited margin account, I only want to go short. There's no more risk going short with a margin account of any kind than there is going up. Your risk is pretty much the same. Matter of fact, I don't know of any difference, period, as far as your actual risk. If you're going to go in and out, because if it goes against you, you got to get out of Dodge right now. A cash account, huge advantages. Like Grandma, she's out of whack right now. She'll just wait until she's a winner, because she don't have margin. The margin will work against you. If Grandma had a margin account, she'd already have to sell her shares, because she'd be forced to sell it. If you don't sell your shares for yourself, your broker will sell your shares when you're down to zero, if you're lucky. And if he don't watch your account and you go below zero, they'll make you pay the difference. So you can lose more than you have in your account with a margin account in reality. So it's something to take real serious. There's no room for error. Know your device, know your computer, know your phone, know how to place your trades. Know that you should check and make sure your orders are what you actually think you did. Don't think you're so smart that you do stuff right every time, because you don't. That Grandpa don't. Nobody does. Check your orders. Check and make sure what you did. Now, I'm going to show you quickly the hourly, so you can see. Jeff pointed this out to me the other day. This is each candle here is 1 hour. Okay. We've got 7 days in a row where we've traded in a $3.50 to $5 range from high to low. It's almost that's why the three scenarios I gave you, this day, and that day, okay, here was your red day. These other two were both green days, but they didn't go nowhere. That's why it was $1 and $2. But Tesla can very often will move far more than that in a day. Here you got 242 to 217. $30 move in one day. But and here you have 250 to 241. So you got $9. Well, on a day like this, you're going to have a $9 run straight down without a different signal. So that there's many times when you can make more than $1. Okay, if all you ever had to look forward to is making $1 or $2, you probably don't want to do trading. But you have the potential very often to make $7, $10 per share is not uncommon. Okay, $5, $4 is a nice number. I'm thinking if you make $2, $3, $4, get out of Dodge, take your profit, and wait for the next trading opportunity. You know, and that's just Grandpa's thinking. So yeah, are there some advantages to a limited margin account? Yeah, you can trade going down and take advantage of a situation like this. Okay, or like this right here. That would be a nice $9, $10 run. Okay, or this one right here, $9, $10 going down. Cash account, you can't take advantage of that at all. All right, and so that's your advantage. Disadvantage, you got 3-day trades, and when you use one, you're going to wait 5 trading days to get it back. And that's all they let you do. That's it. So you have 3 of them, and you can burn them all 3 up in one day, which I don't recommend. I would use them sparingly. Pick your 3 days you want to trade and be alert and be on the ball. That's what Grandpa says. Okay, so hope this was helpful. Like, share, and subscribe, all that kind of stuff. Don't take anything Grandpa says as financial advice. Grandpa's not a financial planner, and Grandpa gives buy and sell signals in the Heikin ASHI candles Monday through Friday from around 9:15 in the morning until approximately 11 o'clock or so, depending on how it's moving. If it starts moving straight sideways, I pretty much give it up and wait for the next day. But yeah, we do buy and sell signals Monday through Friday. Can you make some money? Absolutely. Can you lose money? Sure can. Okay, that's all Grandpa knows about that. Okay, think about eternity. Think about eternity once in a while. Grandpa does. And I'm going to do one on a full margin account, which is everybody's dream is to have a full margin account, but there are disadvantages to it, and I'm going to tell you what they are in the next live stream. See you later.